Okay. All right, we're going. We're live on YouTube as well. Okay, perfect. So I assume I'm coming through loud and clear. Wonderful. All right. Well, hello everyone. My name is Daniel Rowe. I have a company that I've developed, Trade the Plan, over the past, let's see, it's been about 4.5 years now. And I imagine most of you saw part 2, and I kind of went through my story as to how I got started trading and all of that. But over the past 4 years, I had been developing automated systems for customers that owned Bloodhound. And through all of that work, kind of figured out what worked and what didn't, and then started developing my own methods according to what I could actually prove worked. And that led to me having to develop some certain types of software, just basically because they weren't available. And I wanted to make the analysis as easy to perform as possible, and as efficient as possible, to save as much time as I could so that I could monitor more markets. So through all of that development, I've got 2 full-time programmers. Through all of that, I have now finally ended up with what I believe are the final versions, or at least pretty close to the final versions of the tools that we'll continue to use for however long, the next couple of decades. So today we are finally releasing all of it. I know a lot of you guys are excited that are already current members, and the installers are being done right now. I think I'll have them up on the website immediately following this presentation. So before we begin, we need to go through this disclaimer. Obviously, trading is incredibly risky, and well, just to make it a little personal, I had personally blown, I think, 3 different accounts. A couple of them, well, let's see, 3 of my own accounts, and then 2 accounts that were not mine. I was actually trading for a couple of other people. And needless to say, if you don't know what you're doing, you are inevitably going to blow that account. So if there's one thing that I could suggest, that would be that all of you would trade a simulated account until you've at least doubled it, or you've been steadily growing it for a period of at least 12 months, I'd say. So yeah, it's incredibly easy to lose money trading. I'm sure you guys know that. But now it's actually incredibly easy to make money. But it takes, a very long time to get to that point. So it took me about 7 years, and now over the past 3 years, I've been, proving it out in sim for a couple of years, and now trading live in this new account just for about the past 6 months or so. And I'm over 350% today. So don't trade with your lunch money. Don't trade with your rent money, because you will lose it. All right, so what I want to do first today is really all about how we can now automate these types of analysis that really have only been able to be discretionarily traded. And I want to go through those 3 main types of analysis. Basically, we have 3 major pieces of software for the analysis, and then 2 pieces of software for combining all of that analysis into an actionable set of rules, and then automating the entries and trade management. So what I want to do first is kind of go over, we did a little bit of this in the previous webinar, but it was just so convoluted, I think. I basically made it way more complex than it should be, just simply because I wasn't properly prepared. So what I want to do really quickly is go through the three major types of analysis that we kind of put together in order to define the trade setup that we're taking. And then we'll go into some examples of how we kind of piece all of that together. And then I'll show you a couple of trade examples. The last major short that I had taken in NASDAQ in the trading room, we'll go over that. I think maybe one more trade that I had managed in the trading room. And then I'll show you the trade that I had taken in NASDAQ last night, where I was actually up pretty big, but ended up giving it all back to take a full stop, which I think was, I lost, I think, $120, but I could have made 6-7 times that if I would have had Blackbird engaged at that time. But I saw the trade set up so quickly, I didn't have time to get Blackbird turned on because I'm still kind of in development mode here. So that's kind of the agenda that we're going to go through today. Wrapping it up with all of the materials that we've put together for learning these methods, and then how you guys can get access to all of these tools and training materials. All right, so we kind of break it down into three major methods, if you will. We're kind of a process that we go through. So we're trying to identify the context. Elliott wave is kind of a generalization of what we're trying to do by assessing the context of the market. So Elliott wave is just kind of a roadmap, if you will, of trying to decipher where the market basically where the market is relative to its previous structure. What kind of trend is it in? Are the waves overlapping? Are they extending and very separated? So when I say Elliott wave, I know that probably bothers some people because it is kind of a subjective type of a thing, but then tell me any type of trend identification that is other than random. I mean, you can look at moving averages, you can look at trend channels. Trend is really a function of the time frame that you're on, right? And if you're only trading one time frame, one type of a setup, or maybe you've got 2 or 3, but you're only always ever applying that to just 1 or 2 time frames, well, then you're not really adapting to the market. So the main idea behind this, and we're not using Elliott wave as rigidly and strictly as it's defined, but we're just kind of trying to go through and, well, let me just kind of break it down like this. We're starting with the higher time frames, looking at the wave counts, the wave structure, if they're overlapping or separating, trying to get a feel for labeling the major swing highs and lows, and then assessing whether we're in that part of a trend that's extending or we're in a correction. So the idea behind what we're doing is trying to assess and find whether the market is in a corrective pattern. Okay. So what we're interested in doing is trading finding the ends of those corrections and fine tuning the entries as close to the area where it's likely to reverse and then go into a trend continuation move. Okay, so that's a pretty simplified way of saying it. Let me break it down a little bit further. We would, for instance, right here. So this is a 33,750 tick chart. Okay, what I try to do is I try to determine what is the operative time frame that the corrective wave is on. So for instance, if this pattern right here, this just typical corrective ABC, if this were taking up between 35 and 100 bars on the 240-minute chart, then I would say the operative time frame for this correction is a 4-hour chart. And then I would have a list of subsequent rules for the faster time frames to confirm that area, you see. So the idea is to match up the correction with a time frame so that we're adapting to the market, we're adapting to the pattern that we're in. We're not trying to form fit a mechanical set of rules to whatever we see developing on the chart. We're actually assessing what we're, what's developing on the chart, and then adapting our analysis and our trade setup to that developing pattern, you see. So that may go over some heads a little bit. I mean, this is, well, I would say it's in depth. It's not complicated. It's very precise in what we do. So there's a flow to first identifying the wave structure that we're in, the type of correction that we're in, and then assessing the number of bars, finding the number of bars within that correction to identify the operative time frame, and then to confirm the end of that correction, we have a list of subsequent rules for the faster time frames. Okay, so we start off with Elliott wave, try to assess whether we're in a 5-wave pattern or a 3-wave pattern. So we're looking for a trending move with waves that are not overlapping, and then we're looking for the typical type of corrective pattern. And we see these things recur over and over and over. So 3s and 5s occur all day long, every single day. And it's just a matter of, are you on the right time frame to identify that? And that's really what it boils down to. So here's just another pretty obvious example. Another perfect 5-wave move up, typical corrective move back down, and another 5-wave move back up. So then once we've kind of assessed the market structure, we want to find the areas where the market is likely to put in that corrective swing low. So you see this swing low right here? This swing low occurs at a confluence of areas defined by trend channels and median lines. And that's typical for, I would say, 80% or more of all of the major corrective swing highs and lows. And probably about the same for the major ends of trends. So for major reversals, those tend to occur at areas in the market geometry. When I'm talking about market geometry, I'm talking about trend channels and median lines. Okay. So to perform this type of analysis across multiple time frames for one, but then also, across multiple instruments, to be able to do that fast enough and thoroughly enough to actually make use of it in real time, to this point, I would say has been pretty much, I wouldn't say it's impossible. People have been doing this type of analysis for decades, but typically on daily charts or weekly charts or 4-hour charts. But to do this on a faster set of time frames, can I go a little faster? Sorry, Okan. So to do this thoroughly and efficiently, basically you need some sort of automation, okay? Not complete automation, but enough automation to facilitate the process to, make it as quickly done as possible. So what we have is this toolbar here. And this enables us to perform not only market geometry analysis, but volume profile and just so many other things here. So the toolbar is probably the single most incredible piece of programming that we have. It's taken about 2.5 years to, well, about 2 years, right at 2 years to build out. And that's programming, 8 hours a day plus. So all of these buttons here are the market geometry buttons. And when we just click on a high, then click to the next high, this is obviously an extremely huge sell-off. So I want to bring that up to the lowest closing price. So when you're drawing this in, you see you can move them around, you can do whatever, but it's finding this swing low automatically. And we're drawing both the median lines and the trend channels at the same time, you see. So the market moves in geometric patterns. It just does. Can't tell you exactly how or why it does that, but that's the way that the markets move. And just to give you a couple of examples of that, we have, if we're trying to find the next major swing high or low, we typically just draw for the next high from the major low to the major high, major low to major low. See, that's giving us these lows as well. We have the warning line of the median line intersecting this baseline here. That's giving us these lows. We have that high right there. If I want to find the next high, well, I'm just going to drag it out to the next low. That gives me that next high perfectly. It gives me the next lows here perfectly. And then it gives me the final swing low exactly where the warning line of the median line intersects that baseline. You see, so all of those lines those three major lines are intersecting right at the swing low. And that's why we were saying crude oil has likely made a major swing low there. And we should be going up to new highs to go back and break this high. So this is what we've been talking about in the trading room for the past couple of days now. All right, so that's kind of the way the market operates. You can control every single chart, every single workspace, all from one instance of the tool. You can do, all of the Elliott wave labeling. If you're into that, you can control all of your workspaces from here. So you can switch back and forth through the workspaces. We have volume profile built into this. We have an incredible volume profile, actually, that is the single fastest profile available for Ninja, because what it does is it accesses the data in a certain way. So most people's profiles for NinjaTrader 7 are incredibly CPU intensive because of the way that they're accessing the data. But what we've done is kind of a hybrid technique so that you can have 100 or 200 of these on different charts and it doesn't slow down Ninja at all. I mean, if you did more than 10 profiles that are accessing tick data with any other profile, it would basically crash Ninja. Okay, so what's cool about all of this is that we can now access every single value of every line to find our major areas where we want to trade. We can access all of those lines, all of those values. We can find if a bar is touching one of the lines, if it's touching two or more lines created by the same pattern. If price action is moving down into a line, we can get a long. We can access the slope of the lines, whether the channel line is above or below it. So any possible set of details that you would want to know about the market geometry inside of a automation program, you have access to all of that. Okay, you can access all of the profiles, the value area high, low, the VWAP, the cluster, whatever you want. You can access all of that from within Bloodhound and Blackbird. And see, we have rolling VWAP as well. So this is really just an incredible tool. And what you can do with this, if you have, well, for instance, for the guys in the trading room, what we can do now is we can export each other's analysis and then send the file to someone, and then the other person can import it. So if your buddy's been, marking up his charts for the first 2 hours in the morning, and you've just arrived at your computer, well, he can export his file, send that to you, and then you can import all of his analysis. So the next version of the toolbar will have this kind of built into a server, and we'll do a type of a subscription where you'll have a button on your chart and you click on the button and it will load all of our analysis. Okay, so pretty incredible tool. The alert system actually allows you to apply alerts to any line, which will, once triggered, it'll take a screenshot of the chart, email it to you. You could email it to 30 people if you wanted to. So just a really incredible piece of programming. I wanted to at least go over this a little bit just so you guys know what all is involved with this, and at least a little bit of what it can do. You have a risk to reward meter, which is about to be updated even further. You have a chart sync button. You can sync several different charts together. You can sync different instruments together. Continuous contracts with front month contracts to do manual backtesting, to scroll bar by bar. This latest version is it's offset by 1 bar so that you can't see the higher time frame bar before the faster charts have completely loaded all the data for that higher time frame bar. Okay, really I could spend several hours on just this toolbar, but for the sake of time, just know that through market geometry and volume profile, we try to basically find the areas of confluence from different major swing points. So supply and demand is a function of the previous areas where supply and demand have come into the market. So a lot of people will teach that the actual area where the market turned is the area where you'll get, for instance, right here at a high, that would be the area where you could expect to get some more supply in the future. Well, that's not the way the markets work at all. Supply and demand is basically a geometric function of the previous areas of supply and demand. So I would look at the major area where demand came in to the next major area where demand came in, and then drawing my channels and median lines attached to the previous area in between them where major supply came in, and that will allow me to identify the next major area where supply and demand will come in. Okay, so that's what we're doing when we're trying to assess the market structure and then find the areas where we want to trade. Okay, and I'll show you some examples of that here in a minute. So the next major thing that we want to do is to confirm those areas. And we do that by a couple of different methods, namely relative volume and density analysis. So when we're talking about volume analysis, we're talking about looking at the volume per bar. Okay, I know a lot of people kind of obsessed with order flow nowadays. I guess it's become somewhat of a fad, but order flow is not really going to help me very much in trying to find the ends of these major corrections where I want to get into a major move. The whole idea behind what we're doing is to try to maximize the amount of profit relative to the amount that we've risked. So some people think 2 to 1 or 3 to 1 is really great R multiple. You're risking $10 to make $20 or $10 to make $30. Well, I'm interested in finding those 10 to 1 or 15 to 1 trades where you're making, $1,500 for risking no more than 100. So the trade that I'm in right now, I risked I think it was 110. Yeah, it was $110 that I risked, and right now I'm up 900 and what time is it? I think it's closing right now because it's moving all crazy. Well, let me just show you briefly. So yeah, the market's just closed. Okay, well, it just killed my stops. I didn't have them set to good till canceled, so I'll have to put my stop back in when the market reopens. But you see, I get into 3 contracts right here. It was just a perfect little setup here. I mean, we have obviously the NASDAQ has been really moving to the downside, right? And it put in a corrective swing high here, which we'll go into in a minute. And then we have a big impulse down right here. Okay, this is basically how I identify that, okay, the market is now ready to move down again. So I want to get into the next corrective swing high, and then the market comes back up. We have all these overlapping waves. We have a big A, triangle B, C, typical corrective move. And I was able to get into that with, I think it was a 12, 13 tick stop, something like that. Okay, so, you know, the amount of reward that we're going for relative to the amount of money that we're risking, it was much less than that. Yeah, I guess it was about 15 ticks. Is huge. So if you're able to find and fine tune the ends of these corrections using the rules that I'm about to go through now, then you're able to get into some very big moves with relatively small stops. And that's really what trading is all about. And that's how you grow your account very quickly. So, all right, let's get back. So through the use of volume and relative volume and density and divergence, which is looking at how fast price is moving, especially on the faster time frames, we're able to fine tune those areas on the faster charts, you know, fine tuning the ends of the corrections on the larger time frames by this type of analysis on the subsequently faster charts. Okay, so these are just some basic examples. I'll show you a few more here in a minute, but this is the redesigned relative volume indicator. We're calling it the volume analyst because we have so many different inputs in this. Basically, this is 7 different indicators built into one, and you decide which input you want to show. Okay, we have volume, density, relative volume, relative density, volume per second, range, relative range. So what we're trying to do is identify when big volume is coming in, number one, excuse me, but try to identify when that major supply and demand is coming in, okay? At the ends of all of these different corrective moves and all of these different major reversals, they have recurring patterns, okay? And they're, after a while, they just get completely obvious to you. They're very easy to spot because these things look similar, you know, just about every time. I would say 80% of the time they have a pretty recognizable, they occur in pretty recognizable patterns. So you see the end of this move here. So what we have is a selling climax, which is that blue bar. It's a wide-ranging bar, selling climax, followed by a narrower ranging bar that is incredibly high relative volume. And it's such high relative volume that even the density, the volume per range, which is the plot behind it, is very, very high. What does that mean? Well, if the market is moving down into a low, how do you have any idea as to when demand might be coming in? If the market's, you know, cranking it out to the downside, what's going to tell you that it's now ready to move back in the opposite direction? Well, if the market is requiring more volume to move the market every tick further, meaning it's taking a lot more volume to move the market now to the downside, then you have some idea that there's demand coming into the market now. And you see on this bar, it's much narrower, the range, much narrower than the previous bar, and it's even higher volume. So that is a sure sign of demand coming into the market there, and it's closing up off of its lows. The next bar is a churn bar as well. This dark kind of, what is it called? Some type of a dark pink or something. That is an extreme churn bar. So that's incredibly high volume per range. And when you see those, chances are that you're witnessing a major turn. Okay, so we have all of these different volume signals, different climaxes and churn bars and volume spikes. I'm not going to go into the details of all of it, but it's basically designed to help you see when you have a lot of supply coming in at a high or a lot of demand coming in at a low. Okay, and you'll see these types of patterns recur over and over throughout the day. Here you just have another buying climax, but it's such a big buying climax. There's such high volume that even though it is a wide-ranging bar, it's so wide-ranging and such high volume that the volume per range is larger than, you know, the past 20 bars, which is why it's showing you that little fat bar behind it. So this means it's a buying climax churn bar. Basically, it's very high density and very high volume. And that puts in the swing high, and then it starts turning down. Okay, so we see these different types of patterns recur over and over, and this is the main tool that helps us do that. And we've completely redesigned it. I would say it's at least 3 or 4 times more accurate than the previous version. So it's really my favorite confirming tool because it is so accurate. So this is one of the 2-bar patterns that we look for, which is just a selling climax followed by a churn bar. But you can see this selling climax was very high density as well. So it's more like a climax churn bar followed by another churn bar. And I know the naming might be a little bit difficult for you if this is all brand new to you, but what this is signifying is a lot of demand coming in at that low. Okay, so if you see this in real time, you see a nice little ABC into that low, huge amount of volume while not breaking out of a previous low. You're not breaking out, so it's not breakout volume. It's a corrective swing low. Okay, and these are some of the things that we look for. Again, another extreme climax, extreme churn bar, very, very high volume, very high density, and a narrow ranging bar. So it's both an extreme spike in the relative volume and an extreme churn bar. You see this little narrow range bar here. We also have an input in the volume analyst that will, based on range, tell you the size of the wide-ranging bars relative to the previous and the size of the narrow range bars relative to the previous. So for instance, this bar right here, it says 99 above it. So that wide-ranging bar is larger than the previous 99 bars. Okay. This little narrow ranging bar right here is smaller than the past 10 bars. Okay, so that just gives us a little bit more information. And that's one of the inputs built into this indicator. Some more examples. This is the volume per second, and we put these on the tick charts. And typically at the ends of a lot of these major corrections and the end of a trend, we'll see very high volume per second. And that's typically indicative of a lot of market orders coming through very quickly. And we tend to see that at these major swing highs and lows. Okay, so that's another confirming tool that we use. And then of course, we want to see volume, we want to see price momentum slowing down into the areas that we're looking to trade. All right, there's a couple of different trades that we may take that may not necessarily have momentum divergence into the high or low, depending on the type of price pattern that it is. But typically, when we're looking for the end of a correction on, say, a 20-minute, an hourly, or a 4-hour chart, before we can get into that trade, we have to see momentum divergence on one of the faster time frames. For instance, if the trade setup is on a 240-minute chart, we want to see momentum divergence on a 5-minute. If it's a trade setup on the 20, we want to see divergence on the 2-minute, the 1-minute, or one of the faster tick charts before we get into the trade. All right, so these are the three main methods that we use. I'm going to give you just a couple of examples of the divergence. This is probably I know it's the only very accurate divergence algorithm out there, because it took me, I think it took me about 14 months just to come up with specs good enough to be able to find these patterns properly. Divergence is probably one of the hardest things to program, because there's so many caveats and all these different looks to divergence. You may want to filter out certain types of looks. So with this tool, we developed it so thoroughly that now you can actually bring in other instruments into it. So for instance, if you're trading the ES, you can bring in the tick or advanced decline line or something like that. If you want to compare different markets, euro currency futures with the pound, you can do that. But the main way that we're using it, besides on tick and advanced decline for the NASDAQ or the ES, specifically for the actual divergence in momentum. So this is the only oscillator that I'll use, specifically because it is momentum, and I want to see price slowing down into the area that I'm trying to trade, depending upon, like I'm saying, the operative time frame, the setup. So we have different rules for all of this, but we want to see price slowing down into that area. So here you see a yellow line. This is double divergence. Okay, we programmed in single, double, and triple to try and identify those types of patterns, like 3 drives to a high or 3 drives to a low. This is one of those triple divergence. You see we have consistently higher lows in momentum, consecutive lower lows in price. You see? So these are the types of things that we're trying to identify. And we're combining all of that together across different time frames. And through the use of all these tools and these methods, and me really trying to identify things that would actually be beneficial in my trading over the years, I have found that probably the single most important confirming pattern is this volume divergence signal. Okay. I don't know, I guess I think it speaks for itself, but you see this major swing high here? Let me just say it like this. To have a setup, a corrective pattern occur on a 4-hour chart, the only way that I can get into that trade, the 4-hour chart being the operative time frame, say it's like a 50 bar correction on a 4-hour chart, the only way that I can do that is if I have volume divergence at the end of that move. Okay. And more often than not, I try to put a percentage on it, but it's something I see occur over and over and over. And I've taken so many of these, I would say at least 75% of the time, the moves that do end up going into the next trend continuation move out of that correction, they start with this pattern, this volume divergence pattern here. And you see this swing high right here? This is very high relative volume. It's 1200%. Okay, that's very significant. It is in the middle of the night where volume is typically trading low, but relative to that time of day, the amount of volume that transacted here is incredibly high. So that's the big buying climax that we're looking for. Then we're looking for the sign of weakness, and then to go back up on decreasing volume. So finally, by the time we hit this high, volume is way lower than it was at the previous swing high. Okay, so I've programmed out all of these different Bloodhound templates to be able to identify these patterns. And now that we have this reading system, like I told you, we can read all of the lines, all the values of all the lines. We can attach orders to them for the market geometry, for the volume profile. Well, now we have that reader system for the volume and the divergence. So I can read the signals from these lines and from Bloodhound. We actually have a Bloodhound reader now. So I can read all of that inside of Bloodhound from any time frame, from any other chart, any other workspace, without running any of those calculations inside of Bloodhound. Okay, so I can, make the most advanced type of pattern recognition signal inside of Bloodhound and not have to worry about performance or memory or CPU or anything like that. Okay, so these are some of the main confirming signals that we use, but you don't trade them by themselves. Obviously, you're looking to find these volume divergence signals, obviously at confluence in market geometry, but also at what you're at least considering to be the end of a correction. Okay, you're not going to try to go short on volume divergence as the market is screaming to the upside. Right, you're only applying this in certain situations. Okay, so now I want to go over some recent setups here. I'm just going to kind of walk you through how it is that we perform this type of analysis. So for instance, for the next major swing high, all right, we're obviously in a downtrend here. I have plenty of room down to the bottom of the next channel. The market is clearly reversed here, and it's moving down pretty rapidly. And I'm just connecting from 1 to 2. It draws from 3. That gives me the next major area where the market is likely to find resistance. Okay, that was a 240-minute chart. This is an hourly chart. I'm just drawing from 1 to 2. It draws from 3 for me automatically, and that's giving me the next likely spot for resistance. We're in a clear corrective pattern here. The waves are obviously overlapping, and they're contracting waves. So you have higher lows and lower highs. So it's a clear triangle until, of course, we would break out of that C wave. But until we do, we assume it's a triangle. We have the next major area of resistance. Using a different chart, we have even more areas using different swings, larger swings. So 1 to 2, all the way back to 3 here. We have the midline of the channel as well, the big channel. So all of that's intersecting right there. Now the 20-minute. And the examples I'm showing you, these are, much larger setups. Okay, we're also developing all this out for just, a couple of charts. I'll show you an example of that with a trade that I took last night, where we're just looking at, this same idea, but on a faster scale, where we're just looking at like a 3-minute, a 10-minute, or a 9-minute, and maybe a faster tick chart, just 3 or 4 charts. Okay, so this type of methodology applies to, whatever time frame, any set of waves, any corrective type of a move or a trending move on any chart, because the markets are, they're fractal in nature. You have all these recurring patterns on every different time frame. Okay, so it's, in order to adapt to the market, you have to identify what is the operative time frame for the set of waves that you're in, the move that you're in, the type of corrective pattern or trending pattern that you're in. Here, I'm just connecting from major high to major high. Gives me the next major area for probable resistance. Another chart, so tick chart. We use both minute and tick charts, as they do provide different areas oftentimes, especially the faster ones. So sometimes everything lines up perfectly on one of the tick charts, and other times everything lines up perfectly on the minute charts. Okay, so here, connecting from major high, basically the last major high before the final low, and then the final swing high. It draws from 3 automatically and gives me that downsloping upper median line where we get this flood of volume come in, very fast volume, extreme volume per second into that high. So everything is coming together now at all of these different areas. Everything intersects right at the same exact spot. And just simple trend channels and median lines from the most obvious swing highs and lows. Major demand came in here. Major demand came in here. Major supply came in there. So next major spot where major supply will likely come in is right there. You see? So here you do have divergence, but in this case, it's not volume divergence because this is on a crude report. But I wanted to show this one example because, and this is something we see just about every single week on these major crude reports every Wednesday. They tend, when it opens up and it, explodes, the price just shoots 50 or 60 ticks in one direction or the other. It tends to go right into the next major area in the market geometry. So if it's close to it, it'll go right into it and then reverse out of it. Or if it's just reversed out of a major area, then it tends to, to just run straight out of that area in one direction. So this is something that I've been wanting to trade. I used to attempt this more often. But since I've been trading in the live trading room, I don't really do this in front of people because I think it is dangerous and I don't want to encourage people to trade like that. But now that we can automate all of this inside of Blackbird, this is something we can now take advantage of because Blackbird can take that signal instantly, you see. Whereas, if you're slow and maybe you have even a lagging connection, if you're a second or two off, price could have moved 15, 20 ticks. So with Blackbird, we can be pretty precise. All right, so just working down the line here, all I'm doing is connecting to the same major swings that I was connected to before. The market came straight down to what? Next major area of support, that lower median line right there. Okay, now it's pushing back up. Where's it likely going to get to find resistance? What do you think? Next major area in the market geometry, maybe? For sure. So this is that move down that we're looking at right here. Let's move down into this low, into that major area of support. This is the way the market moves in geometric patterns. It's pretty crazy. So just connecting from 1 to 2, this is the ABCD projection that we have here, which is all automatic. I'm just connecting to the major 2 swings. It finds that one automatically. And this is the 200% projection of the distance from 1 to 3. And that bar right there is intersecting that 200% extension line with the lower median line and the 100% warning line of the channel. So twice the distance of the channel, and they're all intersecting right at the same spot. We see this kind of thing over and over and over and over. All right, so now it's moving up. We have a typical type of A wave, then a B wave down. We're looking for one more push up. Obviously, these are the volume divergence signals in the Bloodhound template. Big, huge selling climax, big, huge bar here, much less volume here, much less volume there, even less. And then another, it's kind of a volume spike there, but it's much less than at the previous area. You got another one at the major high. So this is volume divergence on the 20-minute chart. And we would use this or the 5-minute to confirm setups on the 4-hour chart. All right, so the next major area that we have on this chart is the underside of that channel, which is up in here. that warning line. Now on the 20-minute again, but looking at the most recent swings, next major area of resistance is right here, as this is major support, and then resistance. That's going to be the next major area of resistance right here. And then the market does move up into that. Connecting the major highs together on the 5-minute gives us the next area where the market is likely to reverse. But why don't we trade it right here? Because this is a setup on the hourly chart. It takes up about, I think it was 40, 50 hours. So 40 or 50 bars, the operative time frame would be the hourly chart. So what does that mean? That means that we have to wait for divergence, volume divergence specifically, on the 5-minute and or the 2-minute. So here we have that buying climax. We're not going to sell it right there. For one thing, it's moving, way too strong into that area. We want to see a sign of weakness and then go back up on waning momentum and waning volume. And that's what we get right here. And it just barely ticks out that high right into the next area, right where all of the areas across all the time frames intersect. And like I said, we're showing this on, this is a pretty big setup on an hourly chart, previous one on a 4-hour chart, but this works all the way down to a 2-minute chart. And I'll show you the last trade that I took last night using a 2-minute chart, actually a 3-minute chart really. So that was the volume divergence signal. This is the same area using different swings on a tick chart. Here you have kind of the same look to volume divergence, but we're using volume per second here on the tick chart. Okay, and then you also have waning momentum, very strong momentum move into the high, sign of weakness, and then a push back up into the high to test it. All right, so I wanted to kind of show a couple of different trades. What time is it here? It's been about an hour. I think I'll do this. Let's see. Let me, this is the last major short that I took in the trade room. So this is one that I actually initiated during the live trading room and closed it during the live trading room. So I want to kind of let you guys see this. This is me just testing the Bloodhound template, but let me speed this up a little bit. All right. What I'm doing is basically trying to find the next major area where the market is likely to find support. So I'm thinking, okay, we're in, a correction, obviously, on the 240-minute chart. So we're likely going to go down and break the prior swing low. Okay, I'm just kind of going through the higher time frames, trying to figure out what's going on. We had pulled back to the midline here and then started a new move down. Okay, so in this case, I'm simply looking for a retracement back up, but just a small one, something set up on the 5-minute chart. So kind of a small correction, just so I can get into the next move to the downside. Okay. So I think this is just before the open. And I'm just basically doing the analysis here, getting kind of set up for the next trade. Okay, so at this point, we've identified the structure, and we know that we're looking for at least one more wave to the downside to break that previous major swing low. So at this point, I'm looking for the final move of what will be a typical type of corrective pattern, okay? And I'm just kind of explaining all of that here. We'll upload these couple of trade examples that I have to YouTube so you can hear my thought process through all of this. But basically, I'm just, looking for the next major corrective swing high. And this is all live, in a live account in the trading room in front of 25 people or so. All right, let me speed it up a little bit. All right, so at this point, we're pretty much set up. All right, we're at the area. I think you just saw the previous area. I'm just connecting from low to low, and that's giving me this next major area of resistance. And I'm about to get into one right now because the volume is confirming. So I'm selling one right here in my live account. Okay, I got filled there, and I'll get into one more if we can go up a little bit past that VWAP. So this is that, the fact that it came back to the VWAP, that's just happenstance. A lot of people try to trade that VWAP and they don't necessarily do so well. But in this case, according to the market structure and the price pattern, this is a pretty clear corrective move. It just so happened that it also came back into the VWAP, right? So at this point, I'm just kind of looking to see if I got into this thing a little bit early, how much further is it going to go? And where do I need to get into my second one? So by this point, I had already gotten into my second one right at this down sloping trend line. Okay. So you see everything came together. Whoops. Whoa. Right there at that high. The second contract, I think, was one tick from the high. So I put in my limit right at that trend line, as clearly so many other people did, because a ton of volume transacted right there on that trend line. And now I'm just managing it down to a break of this low. Okay, at this point, it's pulled back pretty well, so I tighten up my stop to break even in case it's going to come back and get me. And I'm just waiting for it to push down to new lows. To kind of edit it a little weird here. I'm not sure where it's at right now. I'm probably explaining something. That's the deal. So right here, I have taken one off, and now I'm going to tighten up my stop, and I'm looking to get down to the next area. So let's fast forward this a little bit. At this point, you see, I should have waited to take, let me stop this for a second. And this is where Blackbird is going to be so critical for one thing, to maximizing the growth of my account. But I didn't have any reason to take that contract off right here. We had a huge bar into that first little area of potential support, that upsloping lower median line. But I didn't really have any confirmation at that spot. I had no reason to exit that first target, that first contract. I didn't need to exit that contract until we broke the prior low and had hit the next area of support, which was this line right here. Okay. Now we still haven't broken the big low that we're expecting to break. But we did break this low right into the area. So that's where I should have taken my first contract off, and that would have netted me another $200 or so. So it's things like this. I mean, this is almost a perfect trade. I got in right at the high and I get out right at the low. So being able to maximize even a perfect trade a little bit more, being able to do that consistently with Blackbird is going to, by this time, I think I would have, if I'm already up 340%, I would have been probably double that if I could have kept myself from making those mistakes that, we all tend to make. I have these rules for my trade management. I know what I'm supposed to do, but the bar moves quick or something and I freak out, and then I it's a little different trading in sim than trading live. I didn't really have these as intense emotions uh, as I did when I was trading sim, but now that I'm trading live, it's pretty intense when you have real money on the line, I guess. Obviously, I try to encourage people to treat a fake money account, a sim money account, as if it were live money, and really until you can do that to some extent, it's going to be impossible for you to trade live money. But truly, once you do go live, your performance does go down. I mean, the sim performance was almost unbelievable, really. But now that I'm trading live, I see myself doing all these different mistakes that, well, if I would just follow my plan, I would have made way more money, or I wouldn't have lost money. I would have kept some money on the trade. And all of these things I'm programming out in Blackbird now. So um, it's really incredible what we can do with Blackbird now. But let me just show you the end of this trade here, because it does go down to a new low, which is here. So this is the 5-minute chart. I'm just waiting for some confirmation. I want to see, okay, well, do I need to get out of it, or do I need to let it ride because it's going to go into a 300 tick move? Well, you see here we have the selling climax, and we're about to get a churn bar here, and that's the little 2-bar pattern that will get me out of any trade. I was trying to talk myself into holding this because I was thinking, well, potentially it could head way, way lower. But here, you don't see it, but there's a big, big churn bar on that 2-minute chart. I don't know if it's going to show up. Let me see if we show that. Yeah, there you go. You see it? So that, oops, that was why I exited right there. So it was volume divergence as well on the 2-minute, but that next bar was a massive churn bar. And anytime I get something like that, I have to exit the trade. So thankfully I did exit the trade, and then look, how it goes back. So this is all built into my trading plan. And if I would follow it properly, I would make way more money. But now that we have Blackbird, we can automate all these things. It's amazing what you can do in Blackbird. And let me just show you one example. So this, I mean, I happened to get into this short as I was preparing for the presentation, but I couldn't ignore it. I mean, I had to take it. But this this trade here now, last night, I was so mad when I got up this morning. But this was a perfect little correction on a 2-minute chart. I mean, this is, typically I'm looking for something to set up on a 20-minute or an hourly, or, at least a 20-minute, occasionally a 5-minute. But here I'm working on developing all of these faster workspaces for, a lot of you guys want to trade faster time frames. I may not take a trade, but 5 times a week, or 3 times a week sometimes. But some of you want to take more setups, and I think to learn the methods, that'll probably be good for a little while for a lot of you, especially in sim, to be practicing on setups that are occurring faster, so you get more exposure more quickly. But anyway, through me developing all of this stuff for faster charts, as I'm doing it, I see this one set up perfectly. And let me see here. Let me just show you what else kind of lined up at that low. So the market had been coming down, right? NASDAQ had been coming down. We actually have what I thought was probably the end of a third wave or something here. So I was thinking, well, we'll likely get a correction back up, but volatility in the Nasdaq is just out of control right now. So what is basically a setup on a 2-minute chart has the potential reward of something that would typically set up on the hourly chart. So I'm way more willing to take these smaller setups when the average true range is so incredibly high. Volatility is just massive. I mean, each average 5-minute bar is 20 ticks. Typically it's what, 8? So, or less. So anyway, we had put in some major support here. We went through some major areas in the market geometry. You'll see me apply that here in this little recording of Blackbird that I have. But then we get an impulse back up and a pretty clear ABC with some major support at that low. All right. And then we turn up. See, that's that big churn bar at the low. Then we turn up really, really strong again. And now another perfect ABC here. You see. So at this point, I have to take that trade. So typically when I see a big, massive spike down like that, a really strong selling climax or buying climax, I prefer to use the next higher low or lower high, as oftentimes the market will kind of overthrow the area. And so that next major higher low or lower high becomes kind of the active area, if you will. All right, so at this point, I've got to take that trade. So I take it last night, but I didn't have time. I mean, I just looked over and saw it, and I had the areas marked in, and it's just starting to turn up. I didn't have Blackbird on because I was kind of developing the template for this specific type of a setup at the time, and I didn't have it ready to go. So I put the trade on manually here, 2 contracts, and I put my stop right behind it. And here I'm thinking, okay, well, the next area that we're looking to get up to is this big downsloping upper median line. And see, sorry, let me say this again. With the volume divergence templates, you can combine them with momentum divergence, a volume signal, or both. Okay, and at that low right there, that is on the 20-minute chart, that is a big selling climax followed by a sign of strength, and then a move down to new lows on much less volume, but that is the extreme churn bar at that low, and that is a sure sign of demand coming in at that low. All right, so essentially what I'm doing is I'm teaching you how to truly understand the way that the market operates. And for me, I don't really think that you can be a profitable trader until you're a good trader. And I think you have to be a great analyst in order to be a good trader. And to be a good analyst, you have to have a good understanding of what makes the market move the way that it does, and how does it typically look when it's putting in these major swing highs and lows. Is it are there recurring patterns that you can not only spot but also profit from? And the fact is, yes, there are, but unfortunately, a lot of people have a lot of misconceptions about what's actually useful and what's not. So anyway, the major area that I was trying to trade to was this downsloping upper median line, and that was the area that I wanted to trade short from, which is why I'm short right now. Okay, so this is what we're doing in the trading room every morning, is trying to figure these things out and find where the market is likely to put in the next major swing high or low, and determine which chart that's occurring on. So at any rate, I was buying this low, looking to trade back to this downsloping upper median line. But what happened was, since I didn't have any type of trade management put on because I had to go to sleep, obviously, I just had my stop behind that. And, I was up. How much was I up? I think it was like 84 ticks or 81 ticks. About 80 ticks. All right, so I was up 80 ticks, and I gave all of that back, every bit of it, and ended up losing $120 on it. So that was let's say $100 for every 10 ticks. So that was $800 that I gave back, and then lost 120. So that's pretty stupid. And if I would have had Blackbird on with all of these management rules that are easily put into black. I mean, if you can think of something that you want to use as trade management, you can definitely do that in Blackbird. Jeremy and the development team at Shark Indicators have quite literally thought of everything when it comes to any type of order management or entry type or anything you could possibly want to do. You can do it inside of Blackbird. So what I want to do now is show you an example of that, how I could have put this on. If I would have been ready, I would have put it on with Blackbird, and I would have at least made, I think it turns out, I think it was like $500 on the trade. So will you guys remind me when the market, today's Friday, what am I talking about? Yeah, I'm holding that thing. It's probably going to turn into a big one. All right, so here, this is what I did. I mean, this is me doing what I did last night to get into this long. Okay, you see I'm just marking up the areas on the 20-minute. Rather than using that extreme low, I'm using the higher low. Well, that gives me upsloping lower median line, gives me a higher low, perfect ABC into that. And now it looks like a 1 up. You see it ended on an extreme churn bar there. And now we're getting that little ABC back down into the same area. So you'll see that once it gets back down there, and then everything lines up across. Here I'm just using 3 charts. I'm using a 9-minute, a 3-minute. I'm using a 9-minute just simply because it's 3 times a 3-minute. So a 3-minute, a 9-minute, and a 50-tick to run Blackbird. So what I do, since I can access all of these charts from any chart, I put Blackbird on a small chart, very small chart. I run it on calculate on bar close true, so that it only runs once every 50 ticks. And I access all of these other charts from that one chart. So that means that I only have to have about 500 bars on that Blackbird chart. And what does that mean? That means that I can run 20 instances of Blackbird on 20 different markets and not crash Ninja, not bog down Ninja. So, I mean, this is really a first. I don't know if you guys understand just how incredible what we can do really is. We can access all of the signals from all of those other charts, from the volume, from the market geometry. I can know exactly when a bar is intersecting that median line and its channel line at the same time. If we have divergence on any of the other charts, I can do specific sets of rules for different trade types occurring on different operative time frames, different different time frames. And I can pick and choose between those different sets of rules on the fly inside of Blackbird, and use the proper trade management per that trade. Okay, so if this is a smaller trade, which is a setup on a 3-minute chart or a 2-minute chart, then, if I get, for instance, one of those 2-bar patterns or something, or if I move to the top of the channel, I at least want to take one contract off, and then I'll let the other contract go to the final target, or I'll take the stop on the second contract. So you see me drawing in the area now on the 3-minute. Okay, this is everything that I did last night before that trade, just took it manually. And now this is me taking it with Blackbird in market replay, letting Blackbird manage it how I should have managed it, how I probably would have managed it had I been awake. So here you see 9-minute chart on the left, 3-minute chart right here, and the 50 tick chart on the right. And I have Blackbird, on the 50 tick chart on the right. So now it's just entered 2 contracts right at the spot, you see. So I wanted to see a churn bar or that 2-bar pattern, that selling climax followed by a churn bar on either the 9-minute or the 3-minute. Okay. And now what I want to do is I want to define my stops and targets based on the market geometry. And this is something we've never been able to do previously, because we've never had any kind of a platform that would allow us to attach trailing orders to these areas in the market geometry. Obviously, some banks and some money, some people with some big money clearly do, because, well, it's pretty obvious that some people with some very, very big accounts are using this type of market geometry stuff. So anyway, what I want to do is I want to define my stops and targets based on, number one, the trade setup, the channel that it's in, and the market geometry produced from these major swings that have created the swing low that I've just traded long. Okay, so essentially, once it starts moving in favor of the trade, I want to just draw a trend channel and median line set from the major low here to the low that I've traded, and then define my target based on that channel, and then trail my stops up below that trend line. Okay, so what I do is I put in my profit targets at fixed distances, 40 ticks and 55 ticks, and I put in my stop loss, both orders at one at 12 and one at 15 ticks. And what I'm going to do is I'm going to draw a red line on the 3-minute chart that will act as my stop loss. So the minute I draw that red line, you'll see one of the orders tighten up a couple of ticks behind it. And then after 20 ticks in favor of the trade, that other order will tighten up about 4 ticks behind that red line. Okay. And once I've determined where my first major target is, which is from that 9-minute chart, that downsloping upper median line, I'm going to change it from white to cyan. And when I change it to cyan, this order, after a couple of bars, will attach to that cyan line. And then it will update. As that line moves down and bars get added to the chart, that order will ride that line. Okay. The other order, other profit target, will be attached to the top of the channel that's produced by the tick chart. Okay, so at least if I make it to the top of that channel, then I'll take some profit, and then tighten the stop up behind the bottom of this channel, and let it ride and see if it's going to make it to that upper median line, which it did. It just decided to come back and tick out this low before it did it, which is, something it's gonna happen to you. Yeah, so right now, one of the stop loss orders is 2 ticks behind it, that red line, you see? And now I'm looking for the next area. Rather than using that down sloping upper median line, I think I'm going to use, so I'm going to use this larger channel, which is closer and probably a safer bet than the one that's further away. And now I'm going to draw in, as the market's moving in favor of my trade a little bit, I'll connect to that low and hide the warning lines. Now I'm changing this line to cyan, and the second order will attach to that. So after the trade moves in my favor a little bit, you'll see the first profit target move up to that line up here. And then you'll see the second one move up to the top of this line. And as the market unfolds, as bars get added to, see, there's the first one's up here at the cyan line here now. And the second one is at this cyan line. The stops are tightening up behind this red line on the 3-minute. And all the orders are attached and good to go. I can go to sleep now, you see. So if it does go up, if I get one of those 2-bar patterns, volume divergence, or we hit my first target, I'll exit. If we don't and it turns down, I get stopped out. Okay. After that, if it will then go up and make it to the next channel or get one of those 2-bar patterns or volume divergence, then I'll exit the second order. If it doesn't, then I'll just get stopped out. So here it's actually making it up to the high, to the top of the channel. And this, of course, was all occurring while I was fast asleep, unbeknownst to myself. Here I was thinking I was going to wake up and, be up $2,000 or $3,000. All right, so there you see me. I'm showing you as it's working up. You see the order moving higher as that line is moving higher. It's moving higher, 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 higher. So it's following that line, a couple of ticks below it. Boom. Now it hits it, and guess what? That's what causes the push back down. All right, now my stop is way past break even, following this red line. So if it comes all the way back that far and takes me out, well, then I want to be out of the trade anyway. And see, Blackbird has done all of that for me. Now, you can program out any kind of sets of rules or, whatever you want. I'm actually doing all of this for you guys now. I've been working with Blackbird for a little while now, but these tools, the ability to be able to read all of these signals from all of these different charts, I've really just completed this development. And there's still a couple of things that we want to build out. For instance, I told you we can access now bloodhound signals from any other chart. Well, we also want to develop a tool that will allow us to access the values of any other indicator. Okay, so for instance, here we have bloodhound on a 5-minute chart. It's giving me this volume divergence signal. This is where I wanted to take that trade up to, you see, it was that high. But it came back and stopped me out right there in the middle of the night. So, excuse me, now that I can access from, any chart, tick chart, minute chart, whatever, doesn't matter. Let me just put on a 5-minute? I'll just do like a 2-minute or something. All right, so here's 2-minute chart. And, well, I'll just put the indicator on. You can put this indicator inside of Bloodhound, but just to make this as fast as possible, TTP Bloodhound Reader. And this is a standalone product now. We may not necessarily have it up on the website all by itself just yet, but it will be in the next day or two, maybe tonight. So these are the, sorry, I get tongue-tied sometimes. I think my brain moves faster than my lips. So I can access Bloodhound from any chart on any other workspace, or just the charts available on this workspace. And then it tells you the list of available instances of Bloodhound. So we want to get that volume divergence signal from the 5-minute. You see, there's really no way that I can build out that specific volume divergence signal on a 5-minute chart on a 50 tick chart. I just can't do it, because I have to count the number of bars on this 5-minute chart, and I can't convert a 5-minute chart to a 50 tick chart. You can't do it. So now that we can access these complex signals from any other chart, I can build all of that out inside of Bloodhound and Blackbird. So I can access these volume divergence signals now, which is really what I've been missing, what I've been needing to be able to do the type of programming and trade management and order management that I've been wanting to do. So you see, it gives you a positive one or a negative one. This is a negative one for the short. And of course, I can bring that into Bloodhound or Blackbird all by itself, or inside of Blackbird, inside of a Bloodhound template, combined with the other market geometry rules, or whatever. Volume signals from any other chart, volume profile from any other chart. You can attach orders to any of this, whatever. So anything that you can think of. I do have quite a bit of this stuff programmed out for the current way that I'm basically trading in front of people in the trading room. But I want to still do, like I said, we've only just completed within the past 10 days or so, really fine tuning the signals reader. To be able to do this stuff is pretty complex. I mean, to read one chart from another inside of another program is pretty difficult to figure out. So it's taken a little while to get all this stuff right. But, like I said, this is what I've been needing to make this happen, to be able to make this possible. So all of that to say, I'm wanting to do much more specific stuff in Blackbird for basically setups on faster charts, which I know a lot of you guys are really interested in. So over the next probably, well, I would say, over the next 10 years, but over the next couple of weeks, I'm going to be fine-tuning the development of these Blackbird and Bloodhound templates for faster charts, and also fine-tuning all this stuff for kind of the current layout of the way that I'm trading in the trading room. But I do have a lot of it done already, but it's just not quite. What I'm trying to say is it's not fully automatic. All right, you have to draw in the market geometry, number one. Okay, as far as defining the profit targets and stop losses, I have been retaining discretion for that, whereas basically I can decide which line I want to attach an order to after the trade is on. So I put the trade in, I put fixed targets and stop losses just to get the trade in there. And then according to a little bit further analysis, I don't want to be rushed into making a decision on where the trade is likely to go. The market will tell me that, and I need to kind of assess that. Of course, before I get into the trade, I have some idea as to how far the market is likely to go and where the next major areas are, but I like to kind of fine tune that after the trade starts moving in my favor a little bit. then I have a little bit more information to work with, and you know, a new swing high or low to help produce the next major areas. So all of that to say that, you know, I can attach orders to this overthrow line above or below any other line. So I can attach stop loss orders to that automatically. But I prefer to kind of finesse those areas using colors. Okay, so I can set my profit targets to any line that I color cyan. I can set my stop loss orders to any line that I color red. You can use any colors you want. I mean, you could use a million different colors for whatever orders you want to do on whatever chart, but I'm telling you all this because this is the way that I've kind of set it up for myself. But I am going to be making it a bit more, how should I say, less thought intensive, make it a little bit more user friendly so that you don't have to think too much. You can just kind of put the trade on, and then, you know, having selected the right money management or the right trade management template, then you just let it ride. So I'm going to do two sets of trade management rules for each workspace. So there'll be a total of 4. I'm going to do one set, like I said, for the workspaces that I'm using in the room, which basically I'll take, you know, any trade setup from the 240-minute chart down to the 5-minute chart, and then I'll do another set of workspaces over the weekend, which will, I was going to say I'd have it by Monday, but it's probably going to take me a couple of days to finish all the Blackbird stuff for those workspaces. So what I'm getting at is the Blackbird stuff, the Blackbird trade management templates are not quite the way that I want them, and I would rather not give you guys something that is going to be too difficult to work with. I mean, I am going to give you all of them, but I don't want you guys to just go ahead and start putting live trades on with that stuff. I mean, you know, don't be irresponsible, and certainly don't be trying to trade this stuff until you've done it in sim for a while. All right, so in the trading room, I'm going to spend probably a couple of weeks in intensive training for all of this, and then another couple of weeks using Blackbird intensively. And in sim, I'm not going to do that in my live account, so I'll do that in sim until, number one, I'm comfortable with it to use it, you know, without thinking about it, and then I'll take it to live. But more importantly, until you guys are comfortable with it. So we'll do all of that together for 3 hours a day over the next, I say a month, but I mean, you know, I'll be using Blackbird every day from then on, so it'll be indefinitely. So I just wanted to kind of give you some ideas to what, you know, the game plan is moving forward. It's not a black box. It's more of like a gray box, and you do have to do some analysis to make this stuff work. And it does take time. I mean, you know, this is real market analysis. This is not your garden variety swing trend and moving average bunch of whatever. This is stuff that I've proven works. I've been trading it live and making money. Some of the guys in the room have been doing incredibly well. Tim, one of the guys that helps us manage the room. Tim, did you send me your track record? He's just done incredibly well. He took a $3,000 account to, I think it was 23,000. And how long was that? 24K. Send all that to everyone. I think you're chatting with just the panelists only. But yeah, three grand to 24. How long did it take you to do that though? and then he took that out and did a deposit on a house. But here, he opened up another account. When was this? This was 46 days ago, 40 days ago, with just a five grand account. He's already up to 7,200, and then yesterday he's up to 9,300. Probably up more than that. Are you up more today? Yeah, I know. But yeah, this is his account at AMP Futures. So at any rate, there's a lot of people doing very well with this stuff. And Josh, who helps me, he's really, I think, fresh out of college. He's been studying this for about a year. He's been working with us, helping us with programming, and he's passed a combine. Tim, you passed the combine, right? And then you got funded and just took the 5 grand and left. So a lot of the guys have passed combines. Josh has passed a combine. It's not difficult well, it's still difficult. Trading is incredibly difficult, but it's not as difficult and stressful once you actually understand the way that the markets move and operate, and you see these things, these reversal patterns and just kind of the corrective patterns in general. Once you see those recur over and over and over, it becomes fairly easy to spot these things. So now then, let me just kind of show you a little bit about how you guys can learn this stuff. So a problem for us in the past has been, we've got these great tools, all this analysis. I do all these training sessions. We have, 300 hours of recordings. But I didn't really have much structured in the way of thorough kind of PDFs and user guides for the software and all of that type of stuff. So we've been lacking in that, and that's one of the things that I wanted to have done for this release of the tools and the trading method. So we've put all this down now in written form. Let me see if I can give you a glance at that. Oh, I didn't make you guys panelists. I'm so sorry. I totally forgot. I'm going to make Bobby. Let's see. I'm going to make Clint, Constantine, Corey, Craig. I want to make some guys that have been with us for a while panelists so that they can help answer some questions. I'm sure you guys have already asked quite a few questions. So I'll let them answer some of you guys' questions as I finish the rest of this. Harold. Josh. Okay, that'll work. Pep. All right. All right, so all of you guys are panelists now, and you should be able to see all the questions, and then hopefully you guys can answer any questions that anybody might be asking. So yeah, I wanted to make it as learnable as possible. I can still do better. I mean, I'm sure, but we've come a long way since we started, and I want to kind of show you at least some of the available documents that we have. And I'm not sure if you can see that very well. But anyhow, the toolbar is a pretty massive program. Once you get comfortable with it and you're able to, do this type of analysis very quickly, it's going to be the single most important tool that you have, without a doubt, as it is for me and everybody that trades with us. So we have a pretty thorough guide on that now, which is critical, which we've been lacking. One for the Divergences Pro indicator, which has been updated. And there's still some things that we need to add in there as far as explaining some of the filters, but I'll be getting on that to finish these documents over the weekend. The only one that's really not completely finished, I would say, is the Divergences Pro one. Everything else is here. We have a thorough how to learn the method all written out, links to videos, and this is the rules and guidelines document, which was just kind of a glossary overview before. We've really kind of, not kind of, I mean, we really thoroughly wrote out all of the details that we could as far as specific rules and guidelines for defining your entries and exits. Now, this isn't a mechanical trading method. People sell mechanical trading systems all over the place. There's a lot of people making a killing on selling mechanical automated systems that they're never going to make you any money. I mean, think about it. If somebody had a fully automated system that makes money, are you going to be able to buy it for $5,000-6,000? Are they going to sell it to you? They're going to sell it to you, but they're not going to sell you one that makes good money. For one thing, mechanical sets of rules, you can't write it properly. You can't do it well enough to conform to all of the specific nuances of the way that the markets move. People say, oh, the markets are constantly changing. Your system needs to change. Well, if you're talking about a mechanical system, yeah, but if you understand the way that the markets work and you have a system based on that, your system is designed for the market changing, because the market is changing. Changing meaning it produces all these different patterns that are recurring, that you can spot, that you can profit from across all of these different time frames. And you need to be able to determine which time frame the setup is occurring on, so that you can have your specific rules for the subsequently faster time frames. I don't know why more people don't teach this way of doing it, because it's adaptive. Mechanical systems are not adaptive. They, by definition, cannot be. So hence they don't make very much money, if at all. I mean, you have some CTAs out there, some fund guys that are fund with a D guys that are, producing some 20, 25, occasionally maybe a 40% return with an occasional 20% drawdown, that have systems built on mechanical sets of rules, but they have a gamut of systems and they determine which one goes on at which point in time. So while each system is mechanical, they determine when those systems are enacted, you see. So there's still some level of discretion, even in these, fully automated mechanical systems that some of these different funds are using. So if you want to make money trading, if you want to make money trading as a retail trader, don't think that you're going to be able to buy some fully automated system from some guy that's marketing, sunshine and rainbows to you, because it's not going to happen. And I think I've spent, I don't know, well over 100 grand, probably somewhere close to 150 grand on trading education and indicators and systems and just all kinds of crazy stuff that's mostly useless. So I'm, speaking from experience. If you want to make money trading, if you want to be successful at this, obviously it's incredibly difficult. But if you want to make money at it, you need to become a good trader. And to become a good trader, you have to be a great analyst. You have to understand the way that the markets work. And this is a very solid understanding of the way that the markets work. Naturally, there's other ways to make money trading. I'm not saying that there isn't. There's some guys that are successful with order flow, and that's scalping though. I can't condone that. It doesn't make any sense to me. That's a different kind of trading. What I'm trying to do is, really maximize the amount of money that I can make relative to the amount of money that I have to risk to make it. And that's what this is all about. So our market geometry guide is the most thorough I think the world has ever seen. It's over 150 pages or 140 pages or something. I think it took, it took a while. Anyway, there's a guy that sells something relatively it's just basically a glossary overview of how to use a pitchfork. I mean, it's very simple. And I think he sells that for like $500 just for like a 40 or 50 page book. So this is about, 20, 30 times the amount of information going into full detail as to how all of this stuff operates. And that little thing right there is worth some money for sure. And of course, how to learn everything and the rules and guidelines for the way that we assess and take trades. And then, of course, everything, all the software that we have, which is as good as it can possibly be at this point. It's taken a long, long time and a lot of money to get to this point, but here we are. So this latest toolbar has, I think it has like 9 different indicators in it to be able to access all of the different areas. So this update is this is massive. I mean, this is there's just maybe a couple of other things that we want to add to it. The volume analyst is I would break all of these down into what makes up all of them. We have that on. We're going to do that on the website. All right. Clint, do you have the links to the web pages? All right. So to learn a little bit more about the volume analyst, I'm going to fill out the web page a bit more thoroughly. It is a brand new design, and it's basically 7 different indicators in one. All right. So we're able to show information from multiple different data streams using one instance of the indicator. So everything is incredibly optimized. All of the conditions for the climax and churn and volume spikes and all of that are completely redefined and much more accurate. I mean, well, you'll see. And I think you have seen from some of the examples previously. The Divergence Pro is, the single most accurate divergence algorithm that there is, because it's so incredibly difficult to program. And of course, now you can look at divergence between different data streams, different instruments. Like I was saying, between like the ES and tick, or what is it? The advanced decline line. All right, the Bloodhound reader, that is brand new. Okay, that's a new product, and that's what enables you to access the volume divergence signals from within Blackbird and Bloodhound. And the volume divergence templates have all been rebuilt, and they are instruments specific. So we have, right now, we just have 5 workspaces built out for 5 different instruments. But if you want a different one, I'll build that for you. I'll have to build you a new workspace for any instruments that may not already be built out. The Bloodhound strategy templates are, I think they're priceless, but I had to put a number on them. I just tried to keep it relatively low. And the Blackbird trade management templates, I'm not actually releasing those today because I don't want anybody to do any damage with it. I want to make those, I want to make them more user friendly, I guess. I want to make them as precise as I can per the different setups that we have on the different time frames. So I need to fine tune those a little bit for different types of trades. Okay. Because, you can't use one management template for, several different trade types. It's basically, you would have 2 different possibilities of management per trade type is the way that I'm going to make it. All right. But again, I've only had limited time to develop those out and to make them as precise as, a so-called perfectionist. I guess I just have OCD to make them as precise as I want them to be. It's going to take me, say, another 10 days probably. And by that time, we'll have that reader that will be able to read all of your other indicators from any other vendor or any other indicator from any other chart. So I guess we'll call that the anything reader. It will read any signal from any other chart so that you can access all of your other indicators from any other charts from within Bloodhound. So that's going to be another product. Bloodhound is now $795. Blackbird is $1995, and then all of the training and PDFs. And I'm going to give you guys a couple of weeks with us in the trading room starting the week after next week. And the trade room is normally $199 a month. And I'm going to give you, at least a couple of weeks to spend 3 hours a day with us. Excuse me, not counting the training sessions. We have 2 training sessions per week, which typically go about 2 hours a day. All of you guys will have access to those as well. But I think we're going to do a third on maybe Wednesday or something just for Blackbird. So all of you guys will continue to get Blackbird training every day in the trading room, and then once a week for those that aren't in the trading room. So obviously, if you want to make money trading, you have to spend money on education. I know. I want to, keep it as low as I can, but the fact of the matter is, I have several employees, and it's taking hundreds of thousands of dollars to produce this stuff. So I think comparatively to what else is being sold out there, to be able to buy something that actually has the potential to make money, for one, I think is kind of a rare thing out there. But to also have methodology that will, teach you the way the markets actually operate, I think is priceless. So this is the last time that I'm ever going to do it for this price. We're going to get up to 10 grand once we get to Ninja 8, and all of you guys will be grandfathered in for Ninja 8 and all the future training material and Blackbird. Well, I was going to say all the Blackbird templates, but I'm sure eventually I'll have probably a very particular set that I'll produce per my own. We're talking, another 18 months from now. But until then, I would say until, at least until the end of the year, everything that I produce as far as Bloodhound and Blackbird relative to the Toolbar, the volume analyst and Divergences Pro, the whole system that we have, all of that will come as a free upgrade to everybody that's, a current owner and anybody that purchases between now and the end of the weekend. So we're going to do this. Typically, Blackbird and Bloodhound are 2790 or something like that. So the guys at Shark Indicators are letting us let that go for $19.95 for Bloodhound and Blackbird both, if you don't already have both. Okay, but if you do already have Bloodhound and you just need Blackbird, then this is your price. If you already have both of those, then it's $49.95 for all of the software, training materials, 2 weeks with us, all of the future training sessions and PDFs and lessons and whatnot. So where are the links to the sales pages, guys? I think yeah, here we go. Yeah, so this is the sales page here. I'm going to put that in the Skype now. In the Skype, in the chat, in the Zoom. That's not it. Sorry, I'm kind of fumbling around here a little bit. There it is. So that is the sales page. And there. Yeah, and if you have any questions, let me put our email in there. I think Corey, Clint, everybody has probably been answering. This is the old page you're saying, Josh? I'm not following you guys. Is this the right link or not? Okay. All right, I didn't know about all that. So, yeah, if you guys have any questions, you want to actually call me and talk to me about all of this, my number is 985-630-8381. And I'll be able to take your calls probably until about 10 o'clock tonight, and then anytime over the weekend. So this sale will run until the end of Sunday. And then we're going back into development mode to try and get ready for NinjaTrader 8. All right. I think Jeremy will have Blackbird ready for Ninja 8 probably either about the same time or shortly after we're getting updated. I want to say it'll be relatively quick, but just to be on the safe side, I would say probably 2.5 months to get everything completely ported over to Ninja 8. So definitely by the end of summer, I would think. And then all of that will come as a free upgrade to you guys. All right. So I know, this industry is, to learn trading obviously is number one, incredibly difficult. I know everybody wants to say the whole KISS method, keep it simple, stupid, but when they're talking about keeping it simple, they're talking about mechanical systems, because trading is not simple, and discretionary trading is not simple. When it comes to trying to automate a mechanical system, yeah, you want to keep it simple. You want to keep it very simple, and you want to have the least amount of rules possible, because the more rules you have, it's degrees of freedom. The more rules you have, the worse the system is going to perform. And that typically goes without saying. So yeah, when it comes to mechanical systems, sure, you want to keep it simple, but if you want to make real money trading, you want to get some good returns, real returns, you need to learn how the markets operate. And we definitely teach you that. So let me see if I have missed any questions here. I'm sure I've missed a ton. Two PCs, Dimitri. So you get one license, which will operate on 2 machines. Zach is saying they may have a beta in Blackbird for the fall. So yeah, obviously Blackbird is incredibly, I was going to say it's complex. I mean, it's the code and the way that it works is very complex, but to use it it's incredible. I mean, I thought it was going to take me, at least a couple of weeks to figure out how to do everything, but basically it just took about 12 hours maybe. I mean, they have such incredibly detailed documentation. So for instance, let me see if I have Blackbird active here anywhere. So if you have Blackbird on the chart, you have no idea what something means. Let me enable it real quick. Well, let me just do this. If you have no idea, how to do something, what something does. For one thing, we're going to teach you pretty intensively over the next several months. But if you're not sure about something, you just simply click on the help menu and then go to documentation, and it will bring you right to very detailed information. And this is the fastest way to learn. For me, I learn much more quickly from written text and a picture, So with everything so detailed and perfectly written out like this, you can fly through this thing pretty quickly. I mean, I know that, maybe I'm a little faster at some of this stuff than most people, but this was very surprising to me how easy it was to learn and how very intuitive the whole entire user interface and just user experience is altogether. It's, for me, this is like a dream come true, having all of this. So it's, number one, been necessary to have Blackbird to even be able to come close to doing what I've wanted to do. And now that we have Blackbird, it's endless what you can do, as long as you have the tools that will enable you to do that. And that's what the past 3 years of my life has been about, is creating those tools to enable this type of trade management and automation. I'm not necessarily interested in full, complete, flip a switch and it starts trading. I'm more interested in automating my trade management, potentially the entry, but only if I enable it. So I want to be able to pick and choose which strategy is going on at what time, and which trade management is going on relative to the type of trade that I'm entering, you see. So now that we have all of this done, it's the sky is the limit here. I mean, this is what I've been working towards for the past, well, I didn't know it, I would say the past 10 years, but specifically over the past 3.5 to 4 years. All right, I'm sure there's thousands of questions here. Let me see. I'm just going to start with the most recent one here. Hi, Jules. What is this? No, Mark, it's not up yet. Once I get the installer, I think I may already have the installer, but I'll probably have it. Yep, I just got him. Hang on a second. It says 11:40, but that's not possible. The time is marked differently here. Yeah, I have the all the installers now, so we'll get those up on the website within the next 20 minutes or so, and then you guys are good to go. And what is tomorrow, Saturday? So we're going to be closed Monday and Tuesday, obviously. Hopefully by Wednesday, this NASDAQ trade is up a few $1,000. So we'll start back on Wednesday, and then we'll do the intensive training starting on the following Monday. So I would say next week, Wednesday, Thursday, Friday, we'll be, working with the current members and whoever signs up over the weekend to just kind of get familiar with the new tools a little bit, and kind of walk you guys through all of that, answer any questions anybody may have, and kind of get everybody up to speed on the new tools. I mean, the methods and the analysis is essentially the same. We just have much better tools now. Yeah, and that's kind of the way it's going to work. And then the following Monday we'll begin the very detailed and intensive training. No, we're not giving away a free month. We're just those people that join today, this weekend. Whoever buys the package between now and the end of the weekend will have 2 weeks in the room with us, to help them get up to speed, basically, and to give them any chance of asking a question live and all of that. And then all of you guys will have access to the recording. So any of you that have been a member for a while but are not necessarily in the room, all of you guys will get the recordings to those 2 weeks. Can you get a month of the room? Sure, absolutely. And your members there, well, you have to be a member though. You have to own the tools to be able to join the trading room. So yeah, there's no scam going on here though, Jules. I mean, you can ask anybody in the room. Yeah, I understand though. There are a lot of scams out there. But no, I mean, I'm not going to teach somebody all the stuff for a month for $200. No. It doesn't, the way that we're set up with the systems for support and the way that we're doing the webinars and the chat room and the forum and all that stuff, it's can't really do a free trial. To give somebody a free trial is to give them everything, except for the software. And I think the methodology is much more valuable than the software. As valuable as the software is, the methodology is really what it's all about. I mean, to actually have something that, for one, has the potential to make money. I mean, you don't. For me, it had been difficult to find anything that I could actually prove made money being sold out there. Maybe there's some good stuff out there that I'm just not very familiar with, but trading is difficult, and as much as we'd all like to fully automate everything, I don't know. I didn't have much luck with full automation. Now, semi-automation, like I'm defining here, is, for me, that's really where it's at, and that's what this is all designed to do, is to eliminate as much human error as possible while still retaining the level of discretion that I think is really necessary to make those high returns. Maybe you can find some mechanical systems that have some decent returns. I'm not looking for that. I'm looking for, several 100% a year. If I wanted 10%, I'd just go find a CTA and give them my money. Uh, I'm interested in big exponential returns, and that's what all of this is designed to do. Um, yeah. Yeah, maybe I can add some of you other guys that are in the room to answer some questions. I'm not trying to be, I want to be as transparent as possible, I guess is what I'm trying to say. I've got nothing to hide. I'm not trying to scam anybody. I just wanted to, number one, I wanted to be able to pay for the programming, the development that I've been doing. It's taken, I don't even know, it's in the hundreds of thousands to produce everything. So, that was unsustainable, obviously. So as much as I would like to keep all of this to myself, and as much as everybody tells me I should, I can't. I have to support this stuff, and I have, people that depend on me for a monthly paycheck. So whatever, all that to say that, I'm making it available to you guys, because I have to, not because I'm trying to make a bunch of money off you guys. And I know that a lot of you have been burned, and I know that I have too. And I just wanted to offer something that actually was, in my opinion and what I've proven and what others have proven, very worthwhile and useful. And now that we have Blackbird, it's going to get even better. I wish I could have been using Blackbird for the past few months so that I could show you my actual live performance with Blackbird. However, the tools are freshly developed, and I'm just getting going very, very good with Blackbird now, now that I do have the tools. So by this time next month, I will be able to show some live results. Well, I say some live results. I'm probably going to go back to Sim for the next month or two, or maybe a little more, just as I get used to, I'm used to managing everything by hand. So I want to kind of get used to Blackbird and give it some time. And, if I fumble with it, I'd rather fumble with it in Sim, obviously. And, I'm sure all of you guys are going to do that too, right? You're all going to trade in Sim until you prove it out. Somebody told me that when I first started trading, and I laughed at them. And man, if I would have just listened to all of these different people trying to give me good advice, I could have saved myself, you know, several $100,000 in several years. So that's what I'm trying to do for you guys. So at any rate, let me see if there are any questions right here. And if I haven't gotten to your question, or if nobody else has answered, then please write us to support@tradetheplan.com, and we'll definitely get back to you. As soon as I'm done, I'll start taking any calls. If any of you guys have any questions, you want to call me directly, I'd be happy to take any of your calls. Okay. There is the email again and again. let me see here. And if you want, just Blackbird or just Bloodhound, get a hold of us as well, because we'll let you get that at a discount as well, and let you join into our training on Blackbird and Bloodhound as well. Okay, so if you're, you don't have enough funds to get into the full suite, you just want to get Bloodhound or Blackbird or both, we'll let you get that at a discount as well, and then join us in all of our training, as I just said. Okay, Clint is sending you guys the Ninja Manager. This is the last thing I'm going to talk about, and then we'll call it a day. So let me log in real quick. This is a free piece of software we're giving away. This is the coolest little piece of software. Corey, one of the guys in our trading room, he's working with us as well, came up with this idea, and it's really pretty incredible. So the link is in the chat. You guys can have this for free. You just have to sign up to the site. I mean, you just, become a free member, and then you can download this. This allows you, let me show you real quick. It's test number 8. Hang on one second here. I'm going to go ahead and install it and show you. So I'm just going to show you this briefly, and then we'll call it a day. If you have any questions, please go ahead and give me a call. I'm going to put that number in one more time, 630-8381, or send us an email. Okay. One second. There we go. So this little guy right here will open any workspace that you set here. It opens up the workspaces folder. For instance, I'll open up the toolbar first, and then any of these other workspaces I can open up in NinjaTrader 7 or 8, and then you can have 2 data feeds. So it'll connect to the first one first, and then your second one for routing orders if you have 2 data feeds. Or if you have a daily end of day data, you could connect to that one as well. You can run it high priority, 32-bit or 64-bit. So what this does is it allows you to schedule when Ninja will open up and run, and the way that it manages Ninjas, basically it will delete the underscore workspaces folder. I'm not going to give you too many details, but it opens up Ninja with a clean, untitled #1 workspace, so that it can connect to the data before it loads any bars or any charts. Okay, you can delete the data cache before it opens, which is really good to do because the data gets corrupted pretty easily in Ninja. So it connects to the data feeds, and then it will open the workspaces one by one, waiting for every single chart on that workspace to fully load before it opens the next one. Okay, and then it just goes through the list until it's done, and then it'll cycle through both of them. It'll cycle through 2 times through all the workspaces until it knows that everything is loaded completely, perfectly. And then if you want, it will lock your PC after it completes. Okay, so you can start your computer up on a timer, using some settings in your BIOS. You can schedule your PC to start up, every morning at 4 o'clock. And then when it starts, you can launch the Ninja Manager, which will cycle through this process, going through all the workspaces, connecting to data, and then lock your PC when it's done, so that by the time you come to the computer, everything is ready to go, and you don't have to waste any time at all getting the platform going, loading charts or workspaces, or anything like that. And starting it this way, being able to delete the cache and reload data, it just ensures that your database is good and clean, and you're running Ninja, as stably as possible, I guess. So this little thing right here is just a huge time saver for all of us. We, by the time we sit down, we're immediately performing analysis, and the faster you can start your analysis, the quicker you're ready for a trade, and the more time you have for analysis, the more markets you can watch. So that's just one little, all the tools that we're designing essentially are for either eliminating steps, making the analysis easier to do, or for automating the steps, for automating as much of the analysis as we can, which is what the divergence and the volume is all about. And then with the toolbar, that's eliminating as many clicks as possible, and controlling everything from that one instance, which is so much lighter for Ninja, so much easier for Ninja to manage. All of our stuff now is really designed to be as optimized and I guess resource light as possible. So that's a free little download. You guys can have that. And with that, I know I've missed a ton of comments, so I'll be sure and read through all those. And if there's anything that didn't get answered, we'll be sure to get back to you. And again, I'll put my email in there one more time with my telephone number. And if any of you want to talk to any of the members or guys in the room, actually, you know what? We have a forum now on our website, and you can sign up as a free member and access the forum. So if you have any questions for any of the guys that are already in the room, you could post that here in general questions, and I'm sure anybody would be willing to answer that. I don't, if there's somebody out there that has some negative opinions, I don't mind if they voice those as well. I'm trying to be as transparent as possible, and I'm, I want to keep it honest, which is why I'm showing you my live track record every week, every Friday in that Friday afternoon session. So, win, lose, or draw, I'm going to show my performance. I just, want to be honest. So, all right, guys, with that, I'm going to go ahead and end it. I know this has been, 2.5 hours now? That's about typical for me, I guess. Thanks, Bill. Thanks, Dimitri. And thanks to all you guys for answering all the questions for me, or with me. Thanks, Scott, John, Tim, Wim, Tanya, Ava, Alistair, Gord. All right. Well, thanks. Thanks, Pep. Thanks, Zach. Yeah, you too, buddy. Appreciate it. RJ. Thank you, sir. Thank you for making those installers. All right, I'm going to cut it off here and get these installers up on the website now. So give us about half an hour and you should be able to sign in. I have to send you guys a new license key for you guys that are already members. I'll have to send you a new license key for the volume analyst. So, read the directions. But if you don't, go ahead and open up the volume analyst licensing workspace before you go and try to open up all those new workspaces. Otherwise, you're going to have like 20 pop-up messages. Yeah, open up a volume analyst workspace. Sorry, volume analyst licensing. It's on the website. Or it'll be there in a second anyway. This one here, volume analyst licensing. It's just one chart with the volume analyst on it so that you can apply your license key. And I'm going to send those out here in the next hour, half hour. No, Paul, I wish I did. I wish I did. I mean, you could get one of the individual tools if you wanted to. Yeah, I mean, maybe we could work something out if you want to give me a call. The Corey from Futures IO. No. I know who you're talking about, though. No. The guy that writes some indicators occasionally in there. Excuse me. No. Different Corey. Okay, you got it. All right, you guys. Everybody have a great evening. I don't know if you guys saw the questions in the questions Q&A. I've probably missed a ton. But yeah, if we didn't answer it, please just send us an email and we'll get back to you.
We answered a bunch of them, 76 of them.
All right. Looking forward to showing you guys some more Blackbird in action here over the next couple of weeks. I'll be posting some videos on YouTube, with our live results here using Blackbird. So, all right, everybody, have a great weekend. Happy 4th of July. If I don't hear from you or talk to you between now and then, have a great holiday, great weekend, and I'll talk to you guys in the trading room on Wednesday. All right, everybody, have a great weekend. Take care, everybody. Difference between what? Oh, yeah. Sorry. We'll do it in an email. Yeah. All right. Bye, everyone.